Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsati. And in this podcast, I'm going to talk to you about how to generate holding period returns of 8.5% to 9.5% in bonds without taking extra credit risk, extra interest rate risk, and extra liquidity risk. Now, sounds too good to be true, but yes, it's very much possible. And INR Bonds definitely gives you the best bonds available to generate returns from such a strategy. If you're a financial advisor, the best place for you is our INR Bonds partner portal, where we give you the most tools, the information, and the easiest of investment processes for your clients. Just sign into INR Bonds partners and see how you can generate the best returns for your clients and grow your fixed income assets with your clients. Log into INR Bonds and sign up for the partners.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.
Back to Let's Talk Bonds. Now, if you take 10-year government bond, it's at 7.15%. 2-year corporate bonds in a range of 7%. 2 to 10-year corporate bonds, 7 to 8% levels. And anything over above that, if you're going down the rating scale, anywhere 8 to 10%. So if you have to get higher returns, you have to take higher interest rate risk if you're going the risk-free way or low-risk bonds. If you want to take higher returns, then you have to go up the risk scale. And for example, if you take the private placement markets, Crazy Bees, it's a 2-year bond at closer to 12%. At 12%, you have Avance Financial 2-year bond at 9.3%. And these are all lower rated bonds. Arca which is a Kirloskar company, 2-year bonds at 8.2%. And ICICI Home Finance, a 2-year bond at 7.42%. So clearly, if you see take higher rated bonds, the returns come down very sharply. Power Finance, 2 to 10 year is in a range of 7%, 7.1% to over just about 7.5%. You have in the Bajaj Housing Finance, Bajaj Finance raising 10-year bonds at 7.82%. And we had very large perpetual bond issuances. HDFC Bank issued 5-year call perp at 7.84%, and State Bank of India 5-year call at 7.75%. So clearly, if you have to aim for returns, you have to work out a good roll down strategy in bonds and identify the right bonds. So I'm going to talk to you about how to identify best roll down strategy and how to generate 8.5% to 9.5% holding period returns. So very simply put, all you needed to do was identify a good bond, which is not AAA rated, maybe in a AA, where the 2-year bond, which is 2024 maturity bond, is trading in a range of say 8 to 9% levels, depending on your risk aversion. So if you want slightly take a little more moderate risk, then you can identify bonds which are yielding 9%. And after 1 year, given that the credits are good and there is enough liquidity in the bonds, the rates, even if you sell these bonds at 50.5% lower, because they'll become 1 year bonds, then you will get a holding period return of if you invested in a 9% bond, you'll get a holding period return of 9.5%. And if you invested in an 8% bond, you'll get a holding period of returns of close to 8.5%. Anything in between will be in a range of 8.5% to 9.5% holding period returns. So INR bonds are shortlisted bonds for you to invest in. Just log into INR bonds. If you're a partner, log into the partner and then contact us. We'll show you the bonds, or just log into our INR bonds. Check out our Market Watch or Quick Invest. Quick Invest is a curated bond portfolio where we identify, shortlist the bonds from a range of about 80 to 100 bonds that is listed on our wider Market Watch. And we provide all the information with our own proprietary rating, which takes into account credit risk, interest rate risk, and liquidity risk. Most important for these bonds is to generate these holding period returns is that you need to be able to sell the bonds. And INR bonds is the only platform that allows you to sell bonds at the price you want to, because we give you a interface where you can actually show your own offers to sell the bonds. And so you can actually determine the price where you want to sell your bonds. So in this market, we see many issuances, and many investors and financial advisors are maybe taking higher risks in search of higher returns, especially credit risks. And we are having many bonds like that are listed at yielding, say, to 1 year, even 1.5 year bonds yielding at 10%. Some of them even at 11.5%, right? But when at these levels, some of the bonds carry very high risk as well. Some of them are not trading very close to even what the peers are trading. And if we see some of the bonds which are even lower rated, but they are trading at very much better levels than some of the bonds that are rated higher as well. So which clearly shows that the market perception of credit, interest rate, and liquidity risk is different from each bond, and thus the rating agencies do not give you. So a AAA bond or a AA rating just tells you what is the current financial situation of the company, but it doesn't tell you what is the level of risk of the bond in terms of credit spreads, or in terms of interest rate risk, or in terms of liquidity risk, which is the most important. So we have INR bonds, as told you about why liquidity risk. Liquidity is very important for bonds. And if you go through our search for yields and my earlier podcast, you will understand why. So holding period returns without taking extra risk is very much possible through a roll down strategy. You buy a 2 or 3 year bond and sell it at lower levels after 1 or 2 years, and you generate holding period returns. And these returns are almost best in class because nobody else will give you no other product can give you such high returns without the level of risk that you want to take. Thank you very much for listening in. Do follow us on our podcast channels. And if you're an investor or a financial advisor looking for a curated list of bonds, download our app, Quick Invest by INR Bonds, where we give you the curated list of bonds from a wide market place for bonds with the most information and our own proprietary risk model and the best in-app investment process.